Samir Arora changing from how the base grain of his money-making mantra? Is that changing because of the times currently?
So it has not changing, but it has changed for now in the sense that we are not interpreting every twist and turn as being the end of the bad phase. Okay. Number one. So for example, in 2008, my problem, if I look at it in hindsight, was that if the market would not go down for 3 days, I would say now it is discounted. Or if the US market is falling or not falling, I would say it is not my job to interpret that market. It is an efficient market, large market. So if it hasn't fallen for 7 days, they are okay. Now I don't trust them anymore also. So I want to go behind the scene to say why. And now I say, no, they are as volatile and as shallow, not as a pure liquidity wise, but in terms of analysis wise, wise as us. So I want to get a little bit behind their issue also, because it is affecting everybody. And in India, the thing is that we used to have till December, say in our long short fund, 65 to 70% net. That has become 50 to 55% net. So things that way have changed. Yeah. And we were at one point even down to 45, but we couldn't control ourselves. Also, that's a bit of the other side, as you said.
Sure.
So, but it's lower than what it has been for like last 2-3 years, the net exposure. Yes.
Interesting. Samir, one more question on the style per se. I was looking at a chart on the terminal, Bloomberg terminal, which showed how despite the yields having come off a little bit from the highs in the last month, value in general, and whichever metric they use for the value chart, is outperforming growth even now, despite the yields coming off. So I'm trying to understand, do you reckon that this trend may last for a while? Like the idea of buying growth at any price is kind of behind?
So growth at any price was actually not even working last year, or at least for the last, if you see Indian stock, because we know only about Indian stock. And that will not work till those valuations adjust to a little bit. Right now, what is hurting is not that we have those high valuation growth companies, but those were not working. It is that these companies that have done well, we would never own. Who will go own Coal India or ONGC India or stuff like that? So you have to go through this and tell the world that, hello, please look at it. It's X%. We don't have it. We will never have it. Let's go and slightly change the framework to 1 year performance and not 6 month performance or 2 years. It's always like that. But those things are, as we say in Hindi, हम इतने भी गिरे हुए नहीं हैं कि इतने गिरे हुए stocks खरीदेंगे. So we can change a little bit on the margin. We can, in our mind, say that we own State Bank and ICICI Bank, which are value in that context. But some of these, and the good thing is now even those commodity stocks are not really doing well. So it will come back. This month so far has been good. And last month relatively was good. But in the sense that because we are long short. But generally the stocks that have done well, some of them we are never going to have, come what may. And some in that sense. So in India, actually, that I don't think the issue is between the highest P stock and a 5P stock.
Okay.
It is that, okay, don't buy some 10, 20 of those egregiously valued stocks and you are in okay territory plus minus.
Got it.